Well, two marquee private sector banks declared numbers. You had HDFC and Kotak both come out with numbers. Let's see first off what's working with HDFC, because the numbers really stood out. First off, at the start of this month, we had the loan growth as well as deposit growth numbers, and that meant the loan to deposit ratio, which has been a key concern for the bank, has shrunk sharply. This is because loans have grown just about 1 to 2% on a sequential basis, whereas deposits have grown nearly 5% sequentially. So you're seeing a shrink on the loan to deposit ratio, which means some bit of borrowing is also getting repaid, and therefore margins might just start to improve quicker than expected. The other piece is that the bank itself guided that loan to deposits, which was at 86% at the pre-merger level, is now going to go back to 86% in 3 to 4 years maybe, rather than the 5 to 6 year period that they had earlier guided for. So they've pulled up the guidance, which is again a key positive for HDFC. Second is asset quality remaining strong. Now this is in an environment where you've seen the entire system face quite a few slippages in terms of, especially on the personal loans front as well as on the MFI front. For HDFC, asset quality has held strong in an otherwise difficult environment, and therefore that's a key positive. Third is ROA improvement on the back of margins holding up at 3.46% and no or low credit costs. You're seeing ROA actually inch up, which is again a key positive. ROAs have gone towards the 2% mark. There has been criticism that ROAs have fallen to 1.8% and whether they'll remain there. That slowly seems to be reversing, and the guidance is starting to unwind. The first signs of it, at least, is visible. So that's the other key. Of course, margin improvement is going to be the next step, and that's something we continue to monitor and look out for as to how quickly will margins improve, because that will give the street confidence. Just in terms of numbers, let's pull those up. Of course, for Kotak Mahindra Bank, in context, you have OPEX, which was more controlled this time around, and because the higher credit cost was an impact, you saw OPEX helping the almost 2.2% ROA number that came through. So OPEX was controlled, a positive. ROA largely in line, but still on the softish side, 2.17% rather than the 2.2% plus. They've guided for a margin recovery, but we've seen margins fall, and we've seen margins fall quite strongly by around 11 basis points, 0.11% over the last quarter. But let's look at, for Kotak, what's not worked, because that's more relevant essentially. There you go. Asset quality has deteriorated. Slippages have gone up by 0.5% in absolute terms to 1.9%, and that is clearly a concern. SME personal loans are a concern. Growth is also a concern, but margins have declined. We spoke about that by around 0.11%. 4.91% is where the revised margin is at. They're expecting some bit of margin improvement. Loan and deposit growth has also moderated. Of course, some amount of impact from the RBI embargo also putting pressure on the growth numbers. But onto the numbers themselves, let's pull those up. First off, for HDFC Bank, you're seeing largely an inline set versus what was expected. In fact, slightly above expectations is how I would put the numbers itself. You look at that ROA number, this one, just about 5% higher than what the street was expecting, and that's what's given the fillip to ROA and the stock price as well. Let's pull up some of the other key numbers. Margins, of course, holding up fairly well, but growth, advances growth extremely soft. We'll have to wait for this to improve, but the loan to deposit ratio improving will likely lead to an improvement on the advances growth. So that's something we'll have to look out for. Provisions number extremely soft at 2,700 crore, and that's a key positive. You're seeing ROAs improving steadily from 1.88% last quarter to 1.96%, and credit costs also benign. There's no rise there, and that's one of the key positives. The gross and net NPA ratios largely stable. That's how the picture is essentially looking. Let's flip over to Kotak Mahindra Bank. Look at those numbers. There you go. On the NII front, largely in line with expectations. Operating profit slightly below. Profit after tax again slightly below, 2-3% miss. But on the consol PAT, it's impressive, 5,000 crore in terms of consolidated profit after tax for Kotak. So that's one thing that stood out, at least for me. Advances growth, again, look at that. For the size that the bank is, 4 lakh crore, 2% and 3% is a softish growth for Kotak Mahindra Bank. So that is something which is a bit of an overhang. Maybe RBI's embargo going away will help those numbers a little bit more. Let's pull up the asset quality numbers, see what's gone wrong or right with them. Clearly seeing that asset quality is starting to see some bit of pressure, but that's how it's really playing out.